and welcome to my YouTube channel. Now, this is, of course, 10/21/2022. Please, during this program, I would hope you hit subscribe, like, and share. And the idea behind my YouTube channel right now, and I try to do it every day, is I know many people are wondering, what is the market going to do? That's a big question they have. It's a fair question. But the problem is you're not getting the fair answer. All these networks, the CNBCs, all these fake business news networks, the Bloombergs, all of them fill you full of crap because their job is to take care of their sponsors, okay? And their sponsors who pay airtime so they can be on the air. All these advertisers, they want good news coming out of these guys. So no one's going to go buy a car if you listen to me. If you listen to the truth, okay? No one's going to buy a house if you listen to me. So they make sure that whatever they spiel out is a bunch of crap to make you feel good. So you're going to get every day here the truth while we go through this crisis. So let's begin. First of all, we are in a situation of terrible inflation. They even undercut the inflation. When they do the CPI, okay, for example, to give you the inflation, they rig it so it's not as bad as it really is, okay? That's one thing they do. The other thing is, if you take the durable goods orders and you take the Philly Fed, that's a bellwether, okay, for how our economy is really doing. And when you hear from the fake business network how strong the economy is and the consumer has a lot of money and savings and his balance sheet's true, that's a bunch of BS. Are you kidding me? They're struggling. If that was the case, they're doing so good, then why is the market tanking and it can't get out of its own way? In other words, look over here in my chart. Did someone answer? I'd like these guys to tell me if things are so good and people are just filled with so much cash and they're strong and their balance sheets are strong, why is it when the market dropped 20%, it only took 4 weeks for it to break out and run? 4 weeks to run 44%. Why is it in 2020 when the market dropped 31%? 31%. It only took 4 weeks, 4.5 weeks for it to rally all the way up here. 4.5 weeks, are you kidding me, to go 133%? Well, why is it then, if things are so good, we've been in a downtrend for 42 weeks. We haven't broke out yet, as opposed to 11 weeks over here and 4.5 weeks over here. So don't give me that crap, you fake business news networks, okay? So people don't realize what's going on. Remember, the consequences of all this debt, all this spending, okay, and most of all this debt from spending, in that spending is all subsidies and all social programs. And what causes, the consequence of all this debt, it causes savings to decrease. That's why I have to laugh when they lie and say, well, the consumer, he's got so much cash he could retire. Are you nuts? The consequence of the historic debt we have is it decreases savings. It decreases wages. You have higher interest costs and even a risk of even a worse crisis. And you have crowding out. What's crowding out? Crowding out means that that the government's offering 4% for your money. I mean, think about it. 4% they're offering. And that's 2 years. You can loan the government money for 2 years and collect 4%. What do you get at the bank? Not even 25%. I mean, not even 0.25%. So what's crowding out is people are, the government's working against us. That's why the market can't break out, because the government's offering 4% and the banks are offering 0.25%. People are taking their money out of the bank and they're loaning to government. And that means that when you go to the bank to get a startup loan for your business, interest rates are too high because there's little savings in the bank. That's why you're seeing mortgage rates going up from 2.5% up to 7%. That's called crowding out. So the government doesn't work with us, it works against us. These are all the reasons why, and again, when you look at the chart, why we can't break out as we did in 2018 after 11 weeks, 2020 after 4.5 weeks. So all the spending is the problem. And and what's happening is it's killing the bond market, okay? And the bond market is killing the stock market. So if you understand the bond market, and all you have to do is put up TLT. Okay, I'm going to put up right now. Now look at this. This is the bond market. If you have bonds and you went to bonds for safety, you got to be nuts. You're getting killed. You're getting killed. And look at the downtrend. And it's gotten so bad, she broke the trend this morning. Look, right there. She's breaking the trend this morning. When those bond yields go down like this, yields go up. And when yields go up, right, the stock market goes down. And so the bond market, the only way you're going to get this market to rally, okay, or for the bond market to stop going down, which is pushing the yields higher and pushing the stock market down, if we all of a sudden have some fear in the market. Fear. And if you have fear in the stock market where people panic or capitulate, and that means everybody, get me out, get me out, get me out. And when they say that, and everybody panics, everybody throws their stock away, that's when the bottom comes in. But that's not happening. It did in 2020. It did in 2008. Did in 2018. Why is there no fear now? And why are we going down for 42 weeks? Because of no fear? Because they're filling us full of garbage. Everything's fine. So everything is going against you, the investor. And then on top of it, as I said, the spending. So please understand this with the market. As long as this bond market, the only way this bond market is going to stop killing you, okay, and keeping the market going down, we need a capitulation in the stock market. We need something that hits the people overhead that they get so fearful they throw their stocks away. Just get me out. And then people will go back to the bond market. When you go back to the bond market and people start buying bonds, guess what happens then? Then the yields, instead of going up, the yields then go down, and the stock market then the market starts going back up, okay? So as soon as you get the yields going down, the market will go back up. But we need that capitulation. Now let me show you one last chart and what I mean about the capitulation. So you see, the market's going to get worse. It's not going to get better, all right? Please believe me when I tell you that, okay? They're all full of crap. Bunch of knuckleheads, okay? And that's another thing. Stop listening to buy and hold, buy and hold. That's a myth. That's a myth. That's where your brokers and money managers can be lazy. They love it. They love when you hold. They haven't got to do any work, okay? All right, so here's what I'm talking about right here. Look at this. This is when you go back in 2008, okay? The fear shot from, once it hit 40%, shot straight up. Look over here, 2020, shot straight up once it hit 40%. And what happened then? The market crashed. 2008, boom. 2020, boom, big crash. Well, we're not getting that now. Look where the fear is. And why? Because they keep on telling us how great the economy is and people believe it. Okay? So here's what you have to learn how to do. You have to learn how to deal with this. And the way you deal with it is by shorting the market. Learn how to short the market at the right time. When you learn how to short the market, what a difference it makes. And again, as I say to you, look, you have the opportunity to come here every morning and get my opinion, okay, about what I think the market's going to do. It's telling me right now we're going to get one more little rally off the tech stocks that report next week. And then the market's going to start again going back down in its downtrend. Remember, they rigged the market to report the banks first, report the tech stocks second, because they rigged the banks to go up by shifting money from the set-aside money. They shift it to their bottom line, so you get big rallies. You saw that already. Then all of a sudden the tech stocks come in. They don't need profits. All they need to do is beat estimates, and that will go up. Then that's the end of it. So if the information you get from my YouTube channel about the market, okay, please take that and put it to use. Just go to my site, philsgang.com, and sign up for 10 days. It's free. Participate with us for 10 days. Understand how the market works. 10 days, you haven't got to pay a thing. And you will learn how to short. You will learn how to short. Okay? And you'll understand, once you learn how to short, what a difference it makes. Only 80% of people lose money in the stock market. 80%. So you have an opportunity to get on the other side, the 20%, to make money. Okay? You just got to know what you're doing. And we're there to help you do that. And all I ask, if you decide not to join the gang, and you come to my YouTube channel every morning to learn out what the market's going to do, is it going to go up or down? And then again, if you take the 10 days and you don't continue with it, you take the free 10 days and leave, that's fine. Just please help St. Jude. That's all. If you make some money, I think it's a fair deal. All right. I'll see you on the charts. The market is going to get worse before it gets better. That's the bottom line. We'll have these bear market rallies inside the down channel, but don't take those as, oh, things are great again. No. It's not great again. See you on the charts.